Listen, guys, we got to cover something very important today. And for those of you who've been watching the channel for a long time, you already know about this concept. But those of you who may be new, we always talk about understanding the difference between the reality of the situation and the narrative of the situation, okay? These things are often mutually exclusive. They can be the same thing sometimes, right? Reality can also be the narrative, but most oftentimes it's not. And there is a narrative right now that is a complete lie, all right? And it's shaken the market up quite well. And it's going to unfold over time. And what is key for us right now as investors and traders is to identify this narrative so that we can not get shaken by it, right? So what is the narrative? Well, first it starts with energy. Look, I have been pounding the table. I was early on calling the recession before it happened. And now that we've gotten the recession, they're changing the definition of recession, right? But we were months ahead of it. We knew it would happen because we know if Q1 GDP was negative, then Q2 GDP would be negative too, because why wouldn't it be? Things are getting worse, not better. It just stood to reason. It was a common sense call. It's an easy play. In fact, you can start looking to Q3. But the thing is now that we've gotten here, they're changing the definition of it, right? The point is that, look, it's all about narrative. That's why they do the things that they do. And if you get ahead of the narrative, you won't get duped by the narrative. You understand? Narrative is always being created, and it's always being sold to you, just the regular Joe, right? Joe Six-Pack. You're constantly getting bombarded with information because there's a constant war for your opinion and what you think and what you believe to manipulate your behavior. It's just the way the world works. And so when you understand this, it gives you an edge, first of all, to have the discretion and the discernment to seek out the reality of the situation, but also to sniff out when you're being sold a narrative. All right? Does that make sense? So as someone like me who does a lot of traveling, I've been talking about my traveling lately. You know, I fly state to state to state all over the country every single week, almost every week, right? I'll fly, once, twice a week. And I have a lot of experience being all over the place in different parts of the country, different cities, different cultures, different ways, different customs. Listen, I can tell you that despite being one of the guys who called the official recession on a GDP capacity early, I can tell you that when you go to a restaurant at night, you still have to wait in line. Massive lines, right? And when you go to the airport, it's packed. When you go to rent a car, there's very often none, all right? And you have a limited selection, and they're just constantly rotating. I'm telling you that things are still hot out there, okay? They're still hot. And even by the official data, they're telling us that we have recovered all of the jobs we lost starting in 2020, right? And yet demand for oil is plummeting, okay? I want you to understand something, guys, that just like the CPI numbers are fraudulent, just like well, let me put it to you like this. They're real, but the inputs, right, the variables that they type in, that's what's fraudulent, okay? They set it up to be misleading from the start. That's right. So the numbers that they put in there are accurate, but they're designed in a way so that the answer we get is less than it really is, right? If you use the same data that we used in the 80s for inflation, inflation would be well over 20%, right? That's why they keep modifying the way the CPI is calculated, right, to get a lower number. The point is, I think we're starting to see some of these same kind of mischievous things in the oil market, in the energy market. So as Zero Hedge states right here, it doesn't make any sense because when it comes to the physical market, right, oil itself, buyers can't get enough, okay? And earlier Saudi prices for Asian buyers hit a new record high. This was the light sweet crude, okay? There is a relentless demand for physical oil no matter the price. Yet at the same time, oil prices have tumbled. So WTI is like $88 right now, you understand? This is the same kind of crap you see on the COMEX, right? Where there's a divergence between the physical market and the paper market. And we're seeing this play out in energy. And it doesn't make sense. And it doesn't stop there, though, because we just got this huge jobs number, okay? And I want you guys to understand something. For the second month in a row, when looking at the July jobs payrolls report, we're seeing a divergence. And divergence in what? Well, come check it out. So there is a discrepancy between the establishment survey and the household survey. There's a spread of 1.8 million jobs, okay? And this is a big deal. Wherever these jobs are coming from, and we think we know, something broke here. And there's a discrepancy of what's being reported, all right? And I think what's happening is when you look at the labor market participation rate, which is here, you can see that fewer and fewer and fewer people are actually working, yet all these jobs are being created and being filled. So how does that make sense? Well, it obviously implies, assuming the data is correct, that more and more people are taking second jobs. And they're not just taking second jobs, they're taking second full-time jobs. All right? So this is pretty substantial because it's telling you that the economy is actually in terrible shape, right? It's telling you that people can't make it. So they're taking on more debt here. This is non-revolving debt. So this is like car loans and stuff. And here you have revolving debt, which is like credit cards. And so credit card debt is exploding as savings are being evaporated. You see? What this is telling you is that this, mind-blowingly amazing jobs report number is actually quite bad. Because not only do you have fewer people working, fewer quantities of people working, but the people who are working are having to work twice as much. So multiple job holders here, both primary and secondary job is full-time, is an all-time record now. This is bad. It's not good. So I think what's happening is that the market's getting all this wrong. All right. So they're reading this hot jobs report and they're saying, wow, the Fed's going to be able to continue hiking rates because after all, the Fed bases, all of its decisions on this hot job market. And obviously it's still hot. But the reality is that it's not hot at all. It's actually showing you massive cracks in the economy that people are having to work quite literally twice as much now. While fewer people are working, meaning there's more people being a burden on the system, right? These people get money from somewhere, they have to eat. So obviously they're falling on the system, allowing the system to support them, all right? And this increases our cost, the cost on the system. So in a nutshell, this is a very, very bad jobs report, although the market is reading it as a very good jobs report. And you can see the response on yields here. Bonds and treasuries sold off quite dramatically. And remember, we've been looking at this head and shoulders on the 10-year, anticipating a play out of the pattern. And we got the breakdown, but it turned into a false breakout, which is to say we got a very bullish move that turned into a bull trap, which came all the way back up here. It was essentially a bear trap because it snapped right back. And now we're testing this 50 to see whether we can go higher, though I will say it still has a bit of a bearish bias. As the moving average is rolling over and starting to point downwards, it's having trouble getting above it. But that's just short term. I think when you zoom out on the weekly, I think on the daily it has room. But on the weekly, it doesn't look that good. Of course, we'll be watching it to see, but this is still, once again, the most important chart pretty much in all of the markets. So you need to be looking at this daily, okay? This is really telling you what's going on a macro sense. And really, the entire market just got yo-yoed in a big way. All right, so I think everybody was looking at the same pattern that we were here. Everybody was noticing the breakdown, and now everybody's getting caught by the snapback. So this is a big deal, and we need to be looking at it. But again, this is all based on a narrative that's being painted by the jobs numbers, right, and the energy numbers. Right, they're saying that energy's rolling over, which means oil prices are going down, which means inflation's going down, right? And the job market's strong, so the Fed's really in a position to do whatever it wants, right? That's kind of the narrative. But this is actually not the case. So what I would say to you is that just be patient because nothing really has changed. Nothing about anything we've ever talked about to this point has changed. The strategy hasn't changed. But from here, we're going to look at the market activity over the week and to kind of sniff out what it's telling us in terms of momentum for the things we like. So starting with the broad market, remember, this was always our goal for the bear market rally, and clearly we are getting denied and rolled over here. So it was a good call for this target for the bear market rally. But still, it is to be determined whether that is the end of it or whether maybe we come down and test that 50 and maybe keep riding up. We just don't know yet. But for now, it is providing solid resistance, as you can clearly see on all of the indices. In fact, you go to some equities like AMD, which we have been using to help find Confluence. I had posted that I would sell here, if not here, because it was going to be pretty hard to get above $100 and stay there. Clearly, we have broken up to 104, and it is starting to roll over a bit. Now, the volume is very nice on this breakout, I will say. AMD actually looks quite good, but can it hold it? I think that this is a bit of a bellwether for the broad market. So you can watch AMD to see if we hold $100. I think if we hold $100 in AMD, I think the broad indices may go higher than our first bear market target. Okay, does that make sense? I think that this is the kind of confluence we can look for. And again, you can see the same thing playing out in like TSM, right? It's looking pretty good too. And it's, attempting to make the same kind of upwards break. From there, we'd be targeting something like this, about $100 again. 96 to $100. I mean, these are good targets in the near term that would help imply that we're going to get a break to the upside. And look, I saw the VIX was trending today. So I went to see what everybody was talking about, and I think people are getting this wrong. First of all, if you zoom out on the weekly, remember the VIX is just the volatility index. I don't look at this too much because it doesn't mean a lot to me, right? I don't need it. It's just more noise, but a lot of people eat and breathe this stuff, right? Well, I can tell you if you just look at it, the price is right here. It's roughly in the middle, right, over its historical lifetime, right, that we can measure. And people are saying that it's low. But obviously it's not. If anything, it's at the mean. In fact, it's trying to break down out of this pennant here, this wedge. And if it does that, this is where you're looking at, right? This is more of a long-term trend that you would likely try to fall to. And if you look at it on the RSI, you might make the case that, yeah, this is typically where it turns around on the weekly. But if you look at the breadth, it's not anywhere close to a bottom. Anywhere close. Bottoms are always at least to this level here, right? About -5. So you get turnarounds here, you get turnarounds here, right? You get all these turnarounds at these key places at this -5 level, right? Look, turn around here, right? All the bottoms take place when your breadth gets at least -5, -6, all right? And we're still positive. So all the people who are saying that the VIX is bottoming out, which, by the way, people consider that important because when volatility gets very low, it's implying that it's about to get very high, which is to say the market's probably going to sell off. That's the theory anyway. That's how people use it. But again, I think the market's getting this wrong. I don't see that at all. In fact, I see it breaking further down. If it were to continue going down, that once again gives you a confirmation bias to the confluence that the bear market rally may take another step up. Okay, so I actually see it different than everybody else. I think people once again are simply getting this wrong. So in the near term, we have touched our first target. All right, that's it. We've got our bear market rally target. We're there. It's just a matter of whether we start to roll over here or if we take one more leg up, and that's to be determined. But so far, the price action is quite strong. All right, we're actually going to start uranium today by looking at the Sprott physical. All right, this is the over-the-counter version, which I like because it's in dollars as opposed to these Canadian wrong dollars. I'm just kidding. I love my Leaf Bros. But you can see this clear pattern that's happening here. Do you see what that is? This is actually little tiny bull flags, okay? All right, so let's go to a more clean chart. So it breaks up, puts in a bull flag. Breaks up, puts in a bull flag. Do we see that playing out in other places? Yes, we do. Absolutely, we do. Let's keep going. Again, same pattern. Again, same pattern. Confluence. Do you see how the entire sector is moving lockstep with itself? This looks pretty good. I actually like seeing this. So those of you who follow me know that I have been looking for a volume breakout on the double bottom pattern here, okay? Because as you start to ascend this right side, you're looking for that increase of volume to push you through. That's typical of any breakthrough pattern on the up or the down side. But the the volume is waning a bit as we kind of come over here, and I did not like seeing that. However, it could be because it's playing out differently than I anticipated. So while I was looking for this traditional double bottom, what we got is a rounded bottom on the right side, which we originally expected over here, remember. But nonetheless, we got it over here, and this was a basing pattern. So now that we kind of got this basing pattern, we built up a lot of strength here, and now we have simply broke up, bull flag, broke up, bull flag. And it makes me curious whether if that's, kind of what we should be expecting. The RSI looks great. RSI looks very good. The volume could be better, but again, the way that it's ascending, it's actually kind of okay with this volume. It's not bad at all. Let's look at UEC. Again, we had this inverse head and shoulders on the clear neckline, clear break, beautiful volume on the breakout. Now look, you had this ascending volume going into it, all right, and then you got the break. 2 days later, well after the break, you got this huge green candle here. And again, to close the week, we are still close to the top of the week. I don't like the upper wick, but that's okay. It's actually not a big deal at all. Again, what we're doing is we're kind of coming up, making a flagpole, and we're kind of fanning out sideways, more or less. And again, in the case of NextGen, we broke up, and now we're putting in a bull flag. Honestly, I kind of like it. You look at the case of energy fuels. So this is the daily chart, of course. So not only did it break the 200 on the daily, but when we zoom out, it's closed above the 50. God bless it. It closed above the 52, okay? That's kind of a big deal. I really like that a lot. That's very encouraging. So now on the weekly chart, uranium fuels is above the 50. NextGen's trying, but UEC is clearly above, and rather convincingly. Cameco, clearly above, also convincingly. All right, and notice on the weekly chart for Cameco, we didn't get that increased follow-through volume, but it did try to sell off, and it got a nice rebound on this trend line. So we essentially got the retest. In fact, we retested pretty much every day, and we have really built up support of a new, at least short-term low, which is this trend line, and that's actually rather good. This is really, really good. So all in all, when I look at uranium, I'm pretty happy with what I'm seeing, because even though I wanted that volume, like we talked about, the way it's going up is entirely acceptable. In the case of Global Atomic, it's looking very good too. It's working on its 200 on the daily if we come out on the weekly. All right. A bit of an upper week there, but again, a second consecutive weekly close above the 50 on the weekly chart. That is significant. That's a big deal. And so the price action is bullish. It is, in fact, creeping away on people is what it's doing. In the case of Dennison, remember I sold here, right here, on the 27th. And I did not like the price action. I did not like the way it was moving. I thought it looked rather weak, and it has continued to underperform the rest of the sector. This has turned out to be an excellent sell. And nothing's going to change, I don't think, for DNN until we know more about this deal with UEX. So, the best thing for Dennison in the short term, if the only thing you care about is near-term price, would be for them not to get the deal. That would be a boon to the share price in the short term. But if you're a long-term holder, it'll all work out for you. But it will continue to underperform until we know more and what the specific details are and how it all works out. But again, you could see that building, and that is why I sold there. It was clearly underperforming the rest of the sector, and that's not good. So we're going to talk about LEU. I haven't talked about it in a while. I actually completely just changed my chart to clean it up a bit to only show the relevant portions and trend lines here. But it's had a big break. To break this $37 level with volume is not insignificant. It's a pretty big deal. So the market is obviously liking and chasing and supporting Centrus Energy. You get a technical break like this, you go ahead and ride with it. Ideally, what you'll do is come up, maybe come down and retest it and then stay above. So if you're looking to get into Centrus and you haven't yet, and you're looking at this and it's just you feel like FOMOing, don't. Again, the best thing that could happen is let it come up even higher and then maybe come down and retest this key level and then stay above it. And then that will be your entry point to get in or add if you're already in. And again, once you get up here at about the 55 level, you can consider some selling and some profit taking. And depending on how long you've been in, this $37 level may have been a great place to take some profits. But, the moving averages are rolling up. It's about to get the golden cross here in a couple weeks. And, technically it looks pretty good. It broke not only this resistance, but it broke out of this descending channel. And it is officially turning bullish once again. Of course, if you're going to talk about LEU, Centrus Energy, right, then you got to talk about the distant cousin, Silex. Now, Silex has been on an absolute rip, all right? But it's come up to some stiff resistance. I think in my last video, we put this trend line here, and you can see that it keeps deflecting on it. Now, on one hand, this might be a sign that you should take some profits here. But on the other, the consolidation that it's doing is very healthy, and it could easily continue to trade sideways and make another leg up, right? And I also want to point out that the way it went up was very much the same as what we're seeing in the rest of the uranium sector miners, right? So you're getting this leg up, right? And then you flag down, and then you move up, and you flag down. You see what it's doing? This is why I liked what I was seeing in the other miners so much, because this has already done the same thing. Because you see what it does is it essentially just creates stair steps all the way up, right? Just 1, 2, 3, just staircase. A nice, healthy staircase. And by the way, when things are really bullish and healthy, technically, that's how they go up, right? They don't go up in a straight line. They don't do Bitcoin. They take the staircase. Silex looks very good. All right. Now, if you've missed the boat, then, see if you can buy on the clear break of volume of this trend here. So if you're not in now, just keep waiting. It's better to let it go higher on volume and rip this resistance than to buy now and have it roll over on you, right? So I would just wait and see. Me personally, I would want to zoom out on a longer time frame. I mean, we're getting pretty far away from this 50. Okay, so on the daily, it's nice and healthy, but on the weekly, it kind of needs to cool off, right? And so I would give it time to consolidate sideways, maybe come back down, take a break. I'll be looking to get in if we can buy on a strong support level and some kind of sell-off. But, if you're looking to take profits, maybe now's a good time. If you're looking to get in, I'd say be patient. But overall, it's a very healthy-looking chart. The volume's great. All the indicators look great. Everything looks great. It's a very bullish company, and, the market obviously agrees. And again, you have this nice rounded bottom in SIL, right? So from this bottom, we've had some nice moves, all right? Up already 16%. So you had a rounded bottom. You've come up, and you're kind of putting in this little sideways action here. We'll see how that plays out, but it looks fine. It looks good. The volume the last couple of days left a lot to be desired, but again, it's trying to figure out all this noise in the market, and it will. SILJ, very similar pattern, telling the same story. Nice rounded bottom. Again, coming up and now consolidating sideways. You get into companies like AG, though, and this is where the heat really, really starts to turn up. So a nice basing bottom here. Again, very similar in all these equities we're going to see. But you had 2 consecutive closes now. Not only above this trend line that we fell out of, but above the 50. This is extremely bullish, okay? Extremely bullish. And I have been pointing out to you guys these charts in the Confluence that we've had in the past of why you should buy. And let me tell you, it's not too late, my friends. It's not too late. You look at this chart. Is there at any point where you would have regretted buying this trend line? Ever. Even if it didn't bottom on the trend line in terms of the y-axis, right, which is to say price. There was no risk in terms of time. There was no risk in terms of time, right? And this is what I've been trying to say to you guys. Like, even if that doesn't end up being the bottom right there, it doesn't matter because you're not going to have to ride through it for any relevant amount of time. And look, it just rounded out and came right back in. We're back. You understand? And it's not too late. Just look at the chart. Look what it's telling you. Look at the confluence of all of these major historical massive bottoms that just shot straight up. I mean, you're seeing it all play out. Look at the breadth. Look how oversold you have to come back to this exact moment. Look what happened at this moment. I'm just telling you, these charts look really, really good, and you see the same thing no matter what you look at. Endeavor looking really good. Let's zoom in a little bit here. Short-term time frames. You see, we're settling up above, and we're closing above that 50. So, all right, so we are reestablishing bullishness here. Look at that double bottom, huh? Look at that double bottom. I mean, you just have to love that. You have to love that. It looks so good. That was ugly. Let's do that again. Oh, yeah, there we go. That's better. So, yeah, all of these equities look really, really good. Silver looks really, really good. The ones that have not gotten above, they're basing sideways. Totally happy with it. But the bigger, more popular names are definitely breaking bullish, setting new trends. I mean, look, if you bought Hecla down here, right, you're up 32%, up as much as 38%, right? MAG, we talked about MAG on the gold and silver precious metals spaces with you guys. We had Jordan Roy Byrne on, right? Did you hear that interview? We talked about it when it was at $10. I mean, look, you're up 36% since we had that interview talking about how strong of a buy this was. Up 36% already. Already, right? Silver Corp, look at that. Look at that nice rounded bottom. I mean, and now, after talking about it and pointing it out for all these weeks, here we are. And we're, reaping the rewards of our diligence and just seeing the technical confluence of these major oversold levels, right? Let's zoom out on this. Let's zoom out on GDX. Again, seeing the technical confluence. You see this come down. Look at the RSI. See that? Now come down again. Look at the breadth, okay? Now when do you go? Where do you have to go to find the last time you had this kind of confluence? Right here. Major low, major pivot low that went on for years. Years. This could not be a stronger buy, right? And so the ETFs are not, taking off 30, 40% like the rest of these companies are. They're not going to, but not as fast, right? But they're clearly rounding out. You can see that. Let's go ahead and put this on here. Look at this. Look at it. Rounding out for us real good. I mean, it's just clear what's happening, right? So, this sector looks very good. It's my favorite right now. I love gold and silver more than anything right now. Did you know that the gold and silver sectors are the most oversold of anything? At least they were at this moment. Did you know that? That's right. And so this is, once again, this is when I talk about confidence, and being bold to buy on your convictions. And when you see stuff like this, you have to act on it, guys. It's just that simple, because now it's over. That moment's gone, right? And it ain't too late, because believe me, we've got a long way to go. You understand me? But it's just one more example of being confident, understanding the fundamental situation, so that when the chart tells you when your moment, right, quote unquote, has arrived, you can strike. You can strike. You can strike. Some of these major names, I am surprised, have not rebounded yet. But again, we figured that out already too, right? It's the juniors. So where we were looking at the big names for the lows, okay? We were looking at the big names for the confluence of when we would get the bottom in the sector. It's been the juniors, it's been the mid-tiers, it's been the explorers who have really rebounded up, 20, 30, 40, 50, 60% in some of these companies since we bottomed out, right? And the big companies now are the ones that have to catch up. So if your goal is to get quality, you have by no means missed the boat. You are still obviously at the bottom. Look at Agnico Eagle. I mean, sure, we've come up a bit. I told you guys I bought at 48.50 right here, and I did. I bought more down here at like 42, I think, or 40. Yeah, I bought at 40. And so now my average, I'm down like 3%, I think it is, from the close today. Completely happy with that. Do you understand that? Do you understand how happy I am with that purchase? So listen, we're up, what, 15% from the bottom right there, right? We posted about this. I posted this chart. I posted it on Twitter. I showed you the same kind of confluence. You could come out, look at this on the monthly. Look at this on the monthly. Good grief. What more do you need to see? What more do you need to see? Look at this. Look at this confluence. Look at it. Every time you come here on the monthly, you put in a pivot low. right? And just look at the breadth. Once again, you come all the way back to the same historical 2015 level, which was a marker for a major pivot turning point low, right? We went from bear market to bull market on this dime. And this is the same confluence you're getting in equity after equity after equity in this entire space. I cannot pound the table on this stuff enough to tell you guys when I see it, when I find it. And, you know, I'm acting on it too, right? We're talking my book here, baby. And I'm all about it. This is very exciting times. And I'm, you know, to be here and to watch it and to see it play out and to have an opportunity to take advantage of it, it feels good. It feels really good. And I think that all of us who get into these sectors, right, like gold and silver, you know, don't overthink your companies. You know, think about your goals. They all offer something different. You know, your AGs and Endeavors and Fortunas, these guys are going to give you those big percentage gains, right? But your Agnico Eagles and your Goldfields are going to give you really, really nice gains too, plus dividends. You know, and all of these things are going to print money. I mean, they mine gold, right? And we know where gold's going. It's going a lot higher than it is. And so buying confidence, buying faith, we're still very near the bottom here. You haven't missed out too much if you were too chicken to this point. Don't worry about it. Again, just be confident. Everything looks so good. I'm beyond excited for this whole thing. And again, I know without a shadow of a doubt in my heart that we're going to be vindicated on all this again. And, you know, it's just screaming at you. It's just screaming at you what's coming. You look at the backdrop. You look at the fundamental reality of the world we live in and what they're doing with our debts and our currencies, right? And our political powers and how they're rattling against our enemies, okay? How the supply chains are breaking, how everything is coming to a head. And then you look at these charts, and what are they telling you? You look at this gold chart, and what is it telling you? It's a massive cup and handle that's telling you that this thing is about to explode to the upside. And the market knows. That's why it's making this pattern. This is all psychology. This is all emotion. This is all trend. And the trend is up. And we are due for a massive, massive, massive explosion to the upside in these metals. Okay, and it's not necessarily a good thing. It's going to be because a lot of things are breaking in the world. But that's exactly why you get into these sectors in the first place. It's because this is going to give you protection. It's going to give you a hedge against what is to come. So please, just think about it. Consider it. Take my advice. Consider giving yourself some insurance against the worst case scenario, which quite frankly is becoming more and more probable with each day. So listen, guys, this is a monthly chart of Vital Metals, okay? I haven't talked about this company in a while, and part of that's because I just haven't had the time. When I make these videos, I'm often trying to get them out, and I cover the basics, right? I haven't been in the extra stuff lately, but I'm doing it today, dang it. We're doing it today because, listen, as we continue to bump heads with China, I think that these rare earth resources like this, or even phosphate, are going to become more and more and more valuable. And I think that we are still looking at an excellent and early entry point into a company that could be worth substantially more money in the future, in the coming year, 12 months, than it is today. This is a monthly chart. Not only are we getting this horizontal support here, but it's right at the same place with Confluence of the 50 on the monthly chart. We go to the weekly, look at that, same thing. This feels like very strong support. Unfortunately, I will admit to you, I was unable to do any accumulating down here. I am hoping to see, you can see every week it comes back in the same range, right? So I'm not going to go out next week and buy it. I'm going to see if we can wait for it to come back down again. But if it does, that's something I'm looking to do, okay? I want to add to this. I do already own it, but I want more of it. The same thing is true with Arrianne Phosphate. I think that this is an extremely pure phosphate play in Canada. And, you know, both of these companies have a lot of wind at their back, especially as the macro political winds change. I feel like these are underappreciated companies that are going to start getting the love and attention that they deserve, especially as they keep developing the way that they have. They're doing a lot of things right, okay? Do your own research. Go check these out for yourself, all right? But, you know, maybe you can push back and let me know where I've gotten something wrong. But I really encourage you to check this out. I think that, at least one of these, if not both, could end up being 10 baggers. I just feel it going that way. I would just encourage you to check up on them because, technically they're a bit oversold, and they're coming into some nice entry points here. So I just want to point it out to you for some long-term, think about it kind of stuff. So listen, I know a lot of you guys don't have Twitter, and that's okay. I can appreciate that, but you should really try to come be a part of our gold and silver, precious metals Twitter spaces that we have every single Saturday, 7 p.m. Central Standard Time. All right, we have special guests on. We've had Don Durrett, we've had Jordan Roy Byrne, and tomorrow night we're going to get PhD of Economics, Keith Weiner. He's also the CEO of Monetary Metals. He's a really cool guy. You've probably seen him in other places like Palisades Radio and the like. Jordan Roy Burns had him on a lot. He's a really great guy. We're going to ask him some really good questions, and this is your chance to come be a part of it. You can come be a part of the community. You can be a part of the interview live, and you can even raise your hand to ask him a question yourself. And I hope you do come to be a part of that. And if anything, come, give your feedback. And I promise I will re-upload and rebroadcast the interview right here on YouTube with the timestamps to all the questions so you guys can, get to the parts you care about the most. I totally understand what that's like. You don't want to listen to the interview at random. You want to know what the questions are. I'm going to deliver that for you. That's just the kind of guy I am. So anyway, with that being said, you guys should totally come check it out. You're going to like it, all right? And we're going to make it worth your time. It's going to be a lot of fun. All right, so what's the too long, didn't watch in 2 minutes or less? I'll tell you what it is. There's a new narrative being shoved down your throat, which is that despite the unprecedented demand for oil and the skyrocketing prices in other countries, here at home, nobody's using oil. The demand's down. WTI is tanking because, the economy's rolling over because we're in a recession, but we're not because that's not the definition of a recession. But, hey, the job market's great because even though fewer and fewer people are participating in the job market, there's millions of more people taking jobs, and we're at record high job numbers, but that's because more people than ever are working two jobs to keep up with the inflation. That's Putin's fault, right? Listen, it's all a bunch of BS. We talked about it on this channel too much. Understand the difference between the fundamentals of the situation and the narrative that you're being sold. What I will tell you is this. We're hitting our targets in the broad market for the bear market rally. We're there. But we could go higher still. Right now, we sit on our hands and we be patient and wait. We're right so far. We might be right even more than we thought. Hang tight. There's no reason to move here. In the case of uranium, we still have several dollars to go, maybe 20, 30% to go to reach our first target. And the way it's chopping up right now, it looks pretty good. We didn't get the volume that we were looking for, but the way it's going kind of forgives it a little bit. In the case of gold and silver, it's a golden opportunity. You should be getting in right now if you haven't been already. I think that we are at or already formed the low. And I think the charts are screaming at you on the backdrop of this macro situation and what they're doing. I feel like people don't appreciate the opportunity that's coming in precious metals. I am all about them. I'm all in them right now. And I can't get enough. I think the valuations that the market is giving us are criminal. They're just criminal, and you should be taking advantage of it hand over fist if you can. Right now, we're going to continue to be patient. This has served us well. We get in our positions and we base them on fundamental realities of the situation, and we fade the narrative and we navigate our way through the narrative. And, we end up being very profitable in the end because of this. And I think that this is still the strategy. I think it is still the winning strategy. And I think all we have to do is hold on, and this is going to continue to work out for us. But don't get bamboozled by all this headline news. It's a bunch of crap, and you know it. Hang tight. Everything's good, but if anything changes, I'll let you know. You can follow me on Twitter for instant updates. I can't always publish a video, but I can easily put out a tweet. And so if anything goes south or sideways, that's the fastest way to get a response from me. You guys stay safe out there.